Hi, I'm with Don Ernst, a farmer's insurance agent in Leawood, Kansas. Hi, Don.
Hello, Michelle.
I have some questions for you today about insurance claims.
Okay.
Now, we've talked about in different videos auto insurance, life, business, and homeowners insurance. Is the claims process the same for most kinds of insurance?
Pretty much the same. Whenever you have an occurrence where you think you're going to need to turn in a claim to the company, a lot of times it's best to go ahead and call your agent first, and then he can help you, or she help you decide whether you need to turn a claim in, whether it's going to exceed your deductible, if it in fact is a covered loss, because you don't want to turn claims in that are going to result in a zero payout. They do actually show on your claim history.
Oh, okay. So you can kind of like pre-check it when you call your agent.
Right, that's the value of your agent.
Okay, great. And then is there a certain time frame within which a claim should be made?
Well, we prefer you turn it in immediately, and it depends on the type of loss. Say, for instance, if it's a broken pipe and it's a water loss where there's some wet carpet or wet walls, you want to get the water off immediately, get the claim turned in right away, so that we can get a restoration company out there and get the water dried up so it doesn't cause any further damage.
Is it possible to clean up too well? In other words, is there something that you need to show the agent to support the claim?
Well, yeah, if you have damaged items, whether it's clothing or furniture, things along those lines that maybe got wet or burnt, you don't want to throw them away because he does have to see the physical evidence that you had those items.
All right, and then how long does the claim process take? Is it about the same for each kind of loss?
Oh, no, it can vary quite a bit. If it's a stolen bicycle, that's pretty easy to handle. That gets done right away. If it's a water loss, we're going to have to get a restoration company in there to help with the cleanup and decide what all items were damaged or need to be repaired or replaced. If it's a major fire, that can take a while.
Okay, and then the deductible, is the claims process where the deductible comes into play?
Usually you pick a deductible based on what premiums you want to pay. The higher your deductible, the lower your premium is going to be because you're accepting more of the responsibility of the loss, the bigger your deductible. And so then, for instance, say in a roof claim, if we were going to pay $9,000 to replace your roof, and if you had a $2,500 deductible, then the insurance company is going to write you a check for $6,500. The contractor is going to send you a bill for $9,000, so you make up the difference with your deductible to the contractor.
Okay, and just real quick, when you said the deductible affects your premium, so if I choose a higher deductible, that means I'm going to pay $1,000 later if that's going to be my deductible, and so my premium is each month or each year is less, right?
If you go with a
if
bigger
it's higher.
deductible.
Okay, and so if you go with and so that's because the insurance company is going to pay less. I'm going to pay more of the actual loss if there is one, right? And that's each time I have a claim. That $1,000 if that's my limit.
Yeah, it's called a per occurrence claim.
Okay, so if I had, I know you don't like this, if I had 3 claims on my homeowners and I had $1,000 deductible each time and they were approved and it was all appropriate, then if I had 3 claims and I was going to pay $3,000, right? Versus if so that's why my premium is less, because I'm kind of hoping that I'm not going to have a claim, but if I do, I'll pay it later.
Right, and most people on most homes now carry much higher than $1,000 deductible. A lot of policies now are a $2,500 deductible or even a $5,000 deductible. So
okay, so then also we talked about in some of the other videos the different coverages that there are. For example, in cars there was property limit. I'm talking about the limits of coverage. So how do those come into play in connection with a claim?
Okay, well, under the auto policy, you're talking about limits of liability. And
okay.
So your liability will come in generally 3 numbers. You'll have a per person or per occurrence for bodily injury, and then property damage. So it might be something like $250,000 per person, $500,000 per occurrence, and then $100,000 for property damage.
Okay. All right, so, and that's pretty self-explanatory. Okay. Are there any tips that you have for us in how to, for example, on a contents claim, on some damage in our home, how to really take advantage of the insurance by having the information to give the agent on what was lost.
Well, a lot of times the inventory will be helpful. I used to give out these little brochures that listed by room, and it'd say living room, and you'd list everything in the living room, everything in the dining room. Nobody ever filled those out because it was just way too much trouble. But it is helpful in the event of a loss that you know what you had. We've had adjusters come to our meetings that said he has stood in a pile of rubble with people and said, okay, what was in this room? And there might have been a hutch. Well, what was in the hutch? And just item by item trying to reconstruct the belongings that somebody had. And so it's kind of difficult. So the best thing to do in these days is a video camera. Almost everybody has access to a video camera. And so if you can walk around the house, take videos, open drawers, cabinets, make sure you've got everything involved in that. And then, if there's a hutch or a chest that Aunt Millie brought across the pond 200 years ago, then you can kind of talk about those types of items, and that adds value to them.
I didn't think about that, but you think about your TV or your couch or your hutch, but what about things that are inside?
Yeah, everybody thinks about the large items, the furniture, TV, stereo. They think, oh yeah, this is what I have, but that's really actually a very small percentage of it. If you start looking in your drawers and what's hanging on the walls, in a workshop, the tools and things that are involved in that, kitchen appliances, plates, pots, pans, blenders, it all adds up. And generally those numbers get to be a lot larger than just the furniture part of it.
Wow. Okay, so then, for example, if the tools all got melted, then does the insurance company, they just write a check for the whole amount to replace the tools right away?
Yeah, most policies are written on a replacement cost basis. So if you had a 10-year-old couch, they're going to buy you a new one. However, what they generally do first is they will pay you the actual cash value, or basically the garage sale value for that item. If it's a 10-year-old couch, you get paid for a 10-year-old couch. But then when you actually replace the item, they make up the difference for the replacement cost. And so that's referred to as recoverable depreciation.
Okay, great. Well, that's really helpful. Thank you, Don.
Thank you, Michelle.